Hey, Think Realty, thanks so much for joining us today on the podcast. It's my privilege to host it today. I'm Eddie Wilson, the founder of Think Realty, founded it back in 2013 as a third generation real estate investor, just to bring a lot of the knowledge forward that I've been able to absorb in my lifetime and a lot of the relationships and connections that I have to make sure that you have a clear path to success in the real estate investment space. I want to say a quick thank you to our sponsor, which is CV3 Financial Services. When you're taking on a new real estate investment project, having a trusted lender is key. Count on CV3 for your fix and flip, rental, cash out, or rate and term refi needs. Visit cv3financial.com/think realty. That's cv3financial.com/think realty. Today, our guest is somebody that's no stranger to the podcast. He's been on our stages. He's been in our magazine. He's been on our podcast. He's been involved in my world for a very long time. Jason Engelman, thanks so much for joining us on the show today.
Yeah, thanks, Eddie. I appreciate the opportunity. It's always a fun time to record something with you.
Yeah. So you're in Fort Worth, Texas today, which is home.
Yes,
And are you at your office today?
I am. Yep, working out at the office, and it's nice, sunny, and bright. It's been real rainy the last couple of weeks here, and so it's nice to get some pretty weather.
Very cool.
Yeah.
Jason and I go way back, all the way back to college days, and I've kind of watched the genesis of Jason's career and all that he's done, and he's built quite the empire in real estate over the past 6 or 8 years. So what is new in your world right now? Like, what do you see going on in the marketplace? What's new with you? How's business going?
Yeah, it's interesting because I think everyone's still a little uneasy about where things are going. I think there was a little bit of a spike earlier this year because we thought the Feds were going to drop rates. Originally it was predicted in March and then came out, well, it'll probably be the end of May. Now we'll be lucky if they drop rates at all this year. And so I think we saw a little bit of a spike. What's interesting, though, is I think that spike may continue to rise, but because of an exact opposite approach. I think people maybe were waiting to buy property when interest rates came down. And there's a chance that if they don't come down, that this might be the best interest rate they can get for a little bit. And so you might actually see them start actually trying to go ahead and move forward and buy property to kind of lock it in before it goes higher, if that does happen.
Sure.
So it's kind of interesting just to see how the different mindsets change based off the news that we get. And I mean, this probably better than anybody. I feel like the news changes every day.
Mm-hmm.
And it's really hard to, I guess, make plans based off of daily news. So I think you try to have different goals or different plans per se, depending on what direction or what route the market ends up going. So
Sure.
it definitely keeps you on your toes for sure.
Yeah, a lot of economists talk about what's called the K wave, the chondritive wave, where they say basically like there's this like constant ebb and flow in the marketplace, right? It got interrupted during COVID because we artificially inseminated the marketplace with capital that didn't exist. We just printed it and threw it into the marketplace. It kind of interrupted it, but it's like, I think a lot of people are trying to figure out like, where are we at in that cycle? Are we at the top of the market? Are we on the way up? Are we on the way down? Like, what are your thoughts, right? Like, because in the K wave, every 7 to 10 years, we hit the peak of the market, then it begins a natural decline back down, and then it hits the trough, and then it goes back up. And that's a 7 to 10 year cycle in real estate since 1897. And it's like, but most people really, because of the artificial insemination in the marketplace, it's like, they don't know where we're at. Like, what are your thoughts on that? Are we on the way up? Are we at the peak? Or are we on the way down?
It's tough to say. I mean, you look at the stock markets, like how much higher could the stock market go?
Mhm.
Is where it's at currently sustainable? You listen to people who are really big in real estate, like a Grant Cardone, for example. A lot of his ads that he's throwing out on social media is, hey, stock market's not going to keep at this rate. It's going to eventually fall. Put your money in something safer like real estate.
Mhm.
And then you hear some people who are like, oh, no, it's not going to fall. I mean, the Feds have to cut rates. Biden is not going to let the economy crash before the election. So I think really at the same time, I think it's important just to read, study, try to have as much discernment as possible. Pray,
Yeah.
and just really ask for that wisdom. But, it's interesting because, I mean, obviously we have like the basic, simple stats that everybody knows.
Mhm.
And that's one, we are a shortage of homes. And that's not going to change anytime soon. And I think that's what's kind of kept the market from seeing a bigger fall than what
Mhm.
we have seen, and that a lot of economists predicted. To their chagrin, it just didn't happen.
Mhm.
Um, so many people right now are locked in. I was reading an article, I think it was in the Wall Street Journal. 8 out of 10 people that have mortgages right now have interest rates locked in under 3.5%. So even if they're needing to upgrade in their homes, like they need a bigger home, or if they need to downsize, they're just not willing to put
Mhm.
those properties on the market and exchange
Yeah.
that 3.5 for a higher interest rate. So the inventory is low. The demand is still there. And a lot of people are waiting to buy when interest rates come down. So
Yeah.
it's flooding the rental market.
Yeah.
So there's opportunity in every situation. You just got to know what you're looking at and you got to know your numbers.
I think that's the important part of that K wave, right? Is like if you as a real estate investor understand where you are, you can make money in any market. You can make money in a down market, you make money in an up market. What's interesting to me is I've been talking a lot about this over the past couple of weeks. Is I'm calling it the great disposition, right? Like, which I think what's going to happen is whether or not interest rates fall or not, there's this massive amount of baby boomers, right? Like 15 million baby boomers that are actually going to walk away from their jobs that they actually own, like the businesses they own. 15 million baby boomers own a business today that they'll walk away from in the next 10 years. But not only that, they're going to downsize their houses. They're going to change their residency, right? Like it's said that there's close to 70% of people when they go between the age of 65 and 75 change their residency, right? And so if that's the case, that's why I'm calling it the great disposition, is because not only will they have to go into some other housing that we don't have inventory for today, but they also will leave this other housing stock behind. And so like you said, to your point, we're over 6 million homes underbuilt in the United States right now. That's how much demand is on the marketplace. We have 2.5 months worth of inventory sitting on the MLS right now. It's like, and I think the housing stock is probably going to come from the baby boomer. The problem is most of that housing stock needs to be rehabilitated, right? Like that housing stock is old. It's got your grandma's wallpaper on the walls, right? Like it has 1970s tile on the bathroom, right? Like it's going to be a really interesting, and so like I've been trying to kind of predict where we are in the wave. Another interesting stat, and I'm curious to know your thoughts on this, because the election cycle is real, right? Like there's always movement in the marketplace based on the election. In the last four election cycles, we've actually had an interest rate drop, right? And it may be insignificant, but there's always been a drop of some kind. A lot of people are still predicting maybe a drop in fourth quarter, late third quarter this year. Who knows, right? But the reality of it is our interest rates are still lower right now than what it was in the Obama administration, right? And so it's like, I don't know the interest rates even matter, right? I think it's more public sentiment. So what happens during an election cycle that we as real estate investors should start thinking about taking advantage of?
Yeah, I mean, that's a great point. Here's the one thing I've learned in the last year and a half or so. In uncertainty, you can separate the men from the boys, so to speak, or the goat from the sheep, if you want to use a biblical term, or from the investor to the consumer. Everybody in a good market is an investor.
Hmm.
And then you notice really quick in the tough markets who truly is an investor and who is, getting involved. And I think what's interesting is you made a good point that even now interest rates are lower than where they were, 12 years ago, 16 years ago. I think people focus too much on the interest rates, or they focus on what the media is putting out there for you
Hmm.
to focus on. And there's so many different ways to combat that and to be successful. One strategy that we've been using the last 4 or 5 months is creative financing. Where you got those baby boomers that have rental portfolios that just want to get out, that are willing to owner finance.
Hmm.
And we just locked up 29 properties in Wichita Falls, Texas at 6.5%
Wow.
because he just wanted to get out and he was willing to make it a little bit more attractive to us than what we could have got if we went to a little bit more traditional lending space. So I think a lot of times people overthink, overanalyze, and they don't see the opportunity.
Yeah.
Who knows with the election? Like I personally think that we could see at least a quarter cut, maybe a little bit more. who's going to be the one behind that? Is that going to be the Democrats behind it? Is it going to be the Republicans behind it? Who knows?
Right.
I feel like there's just so much uncertainty that you just have to be prepared for any any outcome that could happen.
Yeah.
Um, Dry
That's
powder is very important right now, and there's just not a lot of liquidity
yeah.
in the marketplace. There's a lot of equity, but there's not a lot of liquidity. And I think part of the reason for that is a lot of investors have got money tied up in CDs, or right now they're not pulling it out of the stock market, which is a little bit more liquidable than most investments because it is doing so well.
Mhm.
And so it's just causing this like tightening on alternative investments, and people are still uncertain because of interest rates, and so they're not willing to put any more capital in, or
Yeah.
they're already putting capital in. So I don't
Yeah.
know if that quite answers your question, but that's just like things that I'm seeing that maybe a cut or two would help
Yeah.
if that does take place.
To me, there are two things that I think sophisticated real estate investors avoid. Number one is buying properties based on interest rate. Like in the end, it really doesn't matter what the interest rate is because a savvy investor is not really paying for the interest rate, right? Like if they're a buy and hold investor, someone else is paying for the interest rate. What they're
Right.
focused on is putting decent housing stock out there at a fair price, because if you can put decent housing stock out there at a fair price, you always have people that are willing to rent it, right? Then it doesn't really matter what the interest rate is. So I think unsophisticated investors worry about interest rate. The second thing that I think that I would say maybe an unsophisticated real estate investor worries about is whether or not they're going to find the next good deal, right? So they pass up on a solid one for the hope of finding a great one, right? In the sophisticated real estate investors understand that time is on your side if you get in early, right? Like the best deals I've ever had are the ones that I actually financed 20 years ago at the highest interest rate, right? Like would I trade those? No, there's no way I would trade those, right? And so I think it's kind of a fool's errand. One more other fool's errand. I want to get your take on this one because there's so much controversy over this one. And that is equity a fool's errand, right? Like so many people want to under leverage their property because they're scared. So they leave all this equity in their homes. And then, go back to 2008 through 2010. There was a lot of people that felt really secure about their equity that disappeared in a matter of days, right? Like that equity means nothing. So what are your thoughts on that? Like to the people that say, stop chasing equity and chase, like in your properties, right? Leverage them to whatever makes sense and go find more properties. Like leverage assets, not equity. What are your thoughts on that?
Uh, yeah, it's the great debate, right? Just like, should you vaccinate your kids or not? Like there's always like
Wow,
these.
you went strong on that one. Yeah.
Yeah, I mean, there's these like debates that you could get on Twitter, and you'll see like the Ramsey followers versus these
Yeah.
other sophisticated investors, and it just goes on and on and on. And so
Yeah.
it's definitely like that hot
Yeah.
topic.
Well, pick a side, man. I mean, give our
Yeah,
listeners something to anchor into.
yeah, exactly. Yeah. Well,
If you
I'm
don't, I will.
yeah, I'm gonna be a politician on this one. No, I'm teasing. No, I'm all about leveraging.
Yeah.
And I think that's how you scale and that's how you grow. Can you get in trouble with that? Sure. Things have been tighter for me this year, because you may be sitting on equity that there's just not a lot of liquidity at the moment. So there's that risk. But at the same time, you have to take a risk to be able to grow. I think the biggest thing, and one of the things I failed to mention in the previous question, I said, you can separate the sheep from the goats, or the investors from the consumers, is in good markets, people get extremely greedy.
Wait, is
So,
a consumer a goat or is a investor a goat? I'm curious to know who the goat is in this scenario.
well, in the Bible, the sheep were the good and the goats were the bad,
Okay, got it. Okay,
like,
got it.
and
Okay,
so like I use that terminology, like you have like the investors,
right.
and then you have the people who have a little bit of understanding of investing because they go to a conference or they read a book, but then when things start getting tight, they start slipping back into that consumer
Yeah,
mentality because maybe they were using capital that they really shouldn't be using to invest.
right.
Um, in good markets, people get greedy.
Hmm.
So, if the interest rate's 3.5% or 4%, 5%, they get accustomed to that. So then when it goes up to 7 or 8, they forget that it's still good compared to 16 years ago.
Hmm.
And they freak out. Or, investors have been used to making 15+%, on their portfolios. And so when it's only making 8 or 9 or 10%, they freak out and they think it's really, really bad. And historically speaking, if you made anywhere between 7 and 9% on your stock portfolio over a period of time, it was a great investment for you. I think Brand Term posted something not too long ago that I thought was ingenious, and that is, if you look at investing in real estate via decades instead of years,
Hmm.
then you're always going to win. And I think, to answer your question about the equity standpoint, people are wanting that quick equity. What we saw in 21 and 22, where it just doubled and tripled, uh, you know, because of whatever case that you want to put the reasoning to.
Hmm.
People are now expecting that. So to go with what you're saying, is equity important? Yes. Is cash flow important? Yes. What's more important? Well, I guess it really depends on your goals, and I guess it depends on your
Yeah.
situation. Um, because what may be good for you may not be good for this investor over here, and vice versa.
Yeah.
But I do think equity is important. I think cash flow is important if you can somehow figure a way to work it in tangent. And if you have a way to maybe capitalize on some of that equity that does grow over a period of time, to leverage to invest in other properties, I'm for it. I love the Burr method. I
Yeah.
try to live by that as much as possible in our investments,
Yeah.
to capitalize that equity.
Yeah.
Um,
Well, I'm going to pick a side. I'm going to go really hard on something. Okay.
yeah.
So yeah, I hope you don't get offended easily.
Oh, go for it.
I'm just kidding. Um, to me, I feel like equity is vaporware. It's something you don't control. It's not really real. The banks actually set it. Appraisers determine it. And literally, I just was trying to buy a beach house the other day in Florida, and the first appraisal came in at a high. The lender was like, "I don't think that's real." Well, now the lender is actually telling the appraiser whether they should receive that appraisal. So they go get another one. It was $300,000 less on the second appraisal. The third, then they're like, no, well, that one doesn't work for us either. I had to pay for 3 appraisals on this one property, and it came in the middle. And the lender was like, oh, that's the one we like, right? And it's like, and then the lender actually used this term to me, and which to me, I almost had to go with a different lender. They said, well, even the Zestimate, right? I'm like, okay, if we're bringing Zillow into this, right? Like, this is ridiculous, like, and so for me, I feel like equity is vaporware. I feel like cash flow is everything. And I agree with what you said, from Brandon. Like I don't get into real estate to try to double my money in 1 year, 2 years, but I do try to get into real estate to double my money every 4 to 5 years. Because
Yeah.
there's a fundamental problem with where we are in America today, and that is people can't retire. They don't have enough money, right? And
Yep.
so they put their money in the stock market or 401ks or whatever it is, and they're getting 3%, 4%, right? If you get 4%, it's going to take you 14.4 years to double your money, right? Like, well, if you start at 20 and it takes you 14.4 years, like you're never going to get to retirement, right? Like it's going to be impossible. And so with real estate, if you can start with 100 grand, stop thinking about the equity in your house and making you feel all fuzzy and warm inside, right? Like take the equity out of the house, go put it into a cash flowing real estate asset that literally will double every 4 to 5 years. And that 100 grand, if you continue to do that year over year over year, in 20 years turns into $3.2 million, right? Like for me, that is a tried and true method, right? Like there's a reason why the Rockefellers are still one of the wealthiest families on the planet. And that's because they play the exact same game I just talked about. And they don't worry about equity, right? Like I know your equity and the balance, of equity in your house makes you feel all warm and safe. It's like until a war happens, until there's an economic downturn, until there's a run on the banks, and you go down that list of things, and it's like, and guess what? When you call to get that equity out that made you feel so warm and fuzzy inside, like there is nothing. There's zero there, right? Like equity, you only get the benefit of equity when you don't need it. You only get the benefit of equity when the banks need it, right? You do not get the benefit of equity when you actually need it. Miss a credit card payment or two and try to go get the equity out of your house, right? Like, because that's when you need it, but then it's not available to you, right?
Yep.
So, anyways, that's my soapbox for today. I'm just going to stand up on that. You can agree, disagree, but to me, it's like
Yeah.
I don't want to play this game. Like real estate is a different game, right? You should play it by the decade.
Yep. Well, and I agree with you 100%. And
Well,
in
good,
fact,
because I was going to come right back at you if you didn't.
yeah, no, no,
Yeah.
I'm with you. You know, what I tell people too, because I've talked to a couple investors lately, and they're like, "Oh, why would I pull anything on the stock market? We're doing like 20%." And it's like, okay, well, sure, but did you actually realize any of that?
Right.
It's all a position. When you
Right.
call your stockbroker up because it tanked, he goes, "Oh, don't worry, you didn't lose anything until you sell. It's just a position."
Right.
But then when it goes up, 20%, they're like, "Oh, look how much money we made you." It's like, well,
Yeah.
no, it it's just a position until I realize it.
Yeah.
With real estate, it's the same thing with the equity. Like you
Hmm.
said, it's a paper, it's a way to it's like the wind,
Hmm.
right? But if you have the ability to somehow capture some of that
Hmm.
and redeploy it, like you're saying, into other properties to create more cash flow, then that's a win. And then when you look at it compared between stocks and real estate, you get the cash flow and the position
Hmm.
versus the stock's just a position until you sell. So
Yeah.
that's what's
You get the position, you get the cash flow, and you get the tax advantage. In the
yep.
stock market, I read this whole thing the other day, and I know we're going a little long on the podcast, but I read this thing the other day where people were like, this new strategy of when the stock market drops, you go ahead and sell so that you can capture your losses for tax advantages. Then you rebuy back in, and then you go back up. And so they're like teaching you how to capture off of losses. And I'm like, this is the dumbest strategy ever, right? Like, why would you, like, you're playing to lose at this point, right? Like recreating your basis and trying to capture your losses in the stock market. I'm like, that's a horrible idea, right? Like, why don't you just play to win, right? Like, and I think to your point, if you made 20% in the stock market, you are playing on borrowed time, because we can go back and the stock market has performed, the S&P, you can show performance. And I love people that are like, that always throw the S&P at me, right? Like, well, the S&P performed 9.5% or whatever. It's like, yeah, unless you invested in Enron, MCI, WorldCom, right? Like, you can go to zero in the stock market, right? Like, and by the way, all of the like big companies were inside of the S&P and they went to zero, right? So like, yeah, if you spread your money equally across the S&P, maybe you get to 9 or 10%. It's like, but if you pick a wrong one in there, right? Like, you're screwed. And by the way, that's not what your stockbroker tells you, right? Like, so anyways, I'm a huge fan of real estate. I think it's way more tried and true. It's a whole lot easier, and it's sustainable over time, you know?
And it's something that anybody can do. It doesn't
Yeah.
take rocket science.
Yeah.
Just go buy, if you have to, go read Rich Dad Poor Dad. Like, I mean,
Yeah.
I read that at 16 years old. Like,
Right.
it's so simple.
Yeah.
Go read your book. Well, I can't remember what it's
Yeah.
called,
Yeah.
but
What was that book that I wrote?
I
Yeah.
don't know. It was like 10 pages long, but no, it was,
Yeah.
honestly, it was a great book.
I wrote the book Time, Wealth, and Purpose, which was leveraging real estate to try to get you to get you your time back, your wealth back, or to increase your wealth and get purpose in your life.
And when I hired, people who are somewhat new to real estate, that was a book that I gave them to read because it was
Yeah.
so practical.
Sure.
And I think with real estate, people like to try to overthink it.
Yeah.
They go to a conference and maybe they get overwhelmed by the 50 different ways you can invest in real estate.
Right.
But if you just cut it down to the very simple basics, anybody can do it.
Right.
And then once you learn and you grow, you can revolve or evolve
Yeah.
as an investor and really, really change your life. And
Jason, real quick, we have not talked about your company at all. Jason has Freaky Fast Investments. Just real quick, give us the brief overview of the company and how they can find you.
Yeah, so you can find us at freakyfastinvestments.com. Right now, we're raising capital for an equity fund that is 11 months old. Basically, what it's allowing the investor to do is buy 30% of turnkey properties and then take in the rest of the capital and buying properties pre-rehab. So
Hmm.
we're giving investors the opportunity to capitalize that equity growth by rehabbing homes.
It's
And
awesome.
so far, right now, we're on pace to hit 11.5% cash flow annualized and 29% in equity, even
That's
though
awesome.
equity is vapor. But right now it's 29%.
Yeah,
So
no, I think that there's, I go hard at equity, but it's in the end, like, you have to have enough equity that the cash flow makes sense, right? And I'm not leveraging my properties over typically 70 to 75%, right? Because typically then I'm messing with cash flow at that point, right? If I'm just always pulling the equity out, the renter is not going to just continue to pay increasing rents, right? Like, the multiple has to make sense. And so, obviously 25 to 30% in equity is great, because what it shows is in your fund, you're holding the properties in a very sustainable place.
absolutely. And
Yep.
really the whole model of our company is to create true passive
Yeah.
investments.
That's awesome.
People, we hear real estate's passive, but it's really not. I
Yeah,
mean, there's a lot of moving parts. So the whole goal behind our model as an investment company is to create true passive investment opportunities for you.
it's awesome. Thanks for being on the show today. If you're a Think Realty listener or viewer, make sure you go follow Jason. Go to Freaky Fast Investments. Is that what it was? FreakyFastInvestments.com. Very
Sure.
cool. Go check out Jason and his team and see what he has to offer. Appreciate you, Jason.
Hey, thank you for the opportunity.
Thank you. I want to say one quick thank you again to our podcast sponsor, which is CV3 Financial Services. When you're taking on a new investment real estate project, having a trusted lender is key. Count on CV3 for your fix and flip, rental, cash out, or rate and term refi needs. Visit cv3financial.com/think realty. Also, one quick thing before we wrap up the podcast, we have an amazing event coming up on July 31st. You have asked for us to come back to your market with our Think Realty Conference and Expo. And while we can't do it physically to every market that we want to go to, we can do it virtually and digitally. And so we have our digital summit coming up. It's a brand new opportunity. We're going to see thousands of people from around the nation come in and be a part of this. And we've got some great speakers and educators coming in that day. Why is this important on July 31st? Well, first of all, because it's what Jason and I just talked about. There's an election cycle coming up. You need to understand how to navigate the election cycle. By the way, I believe that some of the greatest opportunities in real estate happen during election cycle because people sit on their hands. They sit there, they watch debates, they try to make a decision who they're going to vote for. They don't know what legislation. But by the way, real estate has always stood the test of time when it comes to legislative changes. So you want to get involved in real estate when everybody else is sitting on their hands. Warren Buffett says, when everybody else is running out, you should consider strategically how to run in. And you can do that by going to the REI Summit on July 31st. Tickets are only $24.99. But if you're a part of our Think Realty Plus membership, which is only $14.99 a month, that gets you a magazine, it gets you tickets to our summit, it gets you tickets to our event, it gets you all kinds of great stuff. You also get the free virtual summit as well. You can use the coupon code LAUNCH at thinkrealty.com/summit 2024. Launch at thinkrealty.com/summit 2024 to get your discount and get in the game. We want to see you there July 31st, and I'm looking forward to it. Thanks so much for being a part of the podcast today. Please make sure you like it, share it, comment, let us know what you like about it, dislike about it. If you want to disagree with me on the equity thing, I want to hear from you.